Hello investors. It's been a good month for your portfolio. It's been up about 6%, and I think we are getting into a little more interesting times. You must be also seeing the markets are getting a little volatile with US interest rates spiking, commodity prices also are spiking. I think it's having a little bit of a knockdown effect in equity, and we think that it is a very good opportunity for us. Opportunity on two fronts. First and foremost is that we feel that because we are inclined towards quality stocks, which may have been struggling in the recent past, and you have a lot of beaten down stocks or just that stocks which had fallen too much coming up sharply, I think this correction that I feel which will come in the few days will be a true test, because this is when I feel quality stands out. The second thing is that when markets correct, a lot of investors have been calling me up and asking, when do we top up or when do we add to equity? And the markets have not been obliging with a correction. So I think we would get a bit of a correction, and this would be an opportunity. And this in no way changes the larger context of the market or the larger trend, which we think is an up trend. So that is why I feel that if the markets even wobble a little bit, it is going to be an opportunity for us. I look at it positively rather than negatively. Going ahead, I think the question that comes up is that what is this factor which I personally think is a bit of an issue in the short run, or what is it that's causing this volatility? And the thing is what I mentioned, US bond yields. Now, without getting too much into jargon or complication, what US bond yields do, or what happens when US bond yields rise, is that money that is parked in equities tends to flow a bit into bonds. Just as interest rates goes up, it attracts investments. So we have seen bond yields which were down at about 0.54 come up to around 1.54. So that's a substantial move. We also think that this could head to around 190 to 2.00. And I guess that's when the Fed will come into play, because they are committed to keeping rates low. However, in the short run, because of an expectation that inflation will go up, you are finding bond yields go up. And this, I feel, will create a little bit of a short-term wobble in equities. Why is it that inflation is likely to go up? For that, if we look at the CRB index, which is a very good representation of commodity prices, you will notice that even the CRB index, which was at around 100, has moved to 190 or thereabouts. And this is almost a 90% up move from the bottom in commodities. And when commodity prices rise up, you will realize that inflation goes up, and linked to inflation is bond yields. And this experience of inflation is something that you and I also feel in our personal lives. For example, the price of petrol has crossed 100, and I think likely to go higher. Brent crude has almost touched 70. So I think that because of the easy liquidity, money has flown into other asset classes on expectations of a recovery, and generally from demand from China, you will find that commodity prices are going up, which is leading to a fear that inflation will go up, and that in that expectation bond yields are going up. So these things I don't think are going to be a change in trend. The longer term trend is down. However, there are always corrections, and these corrections is what gives us opportunities. So, and we are going to take advantage of these opportunities. They are going to work in our favor. At the same time, the market has been throwing new colors, new themes and new trends. And based on these changes, we also have been making slight adjustments in our portfolio. As trend investors, we are agnostic. It's not that we are in love with large caps, small caps, mid caps. When the trend changes, we will move with it. Yes, it all doesn't happen in a day, or doesn't happen on a dime, but it takes a few months. For example, this month in our portfolio, we exited a stock called Coromandel Fertilizers. We have got into State Bank of India. As I said that, I shared with you last month also that most of our portfolio stocks have come out with fantastic numbers. Coromandel was something we had invested in and disappointed a wee bit. Also, there are some other issues that have emerged with the family and the group, and we feel that it will do well, but we see better opportunities because we feel that the trend has changed in some other spaces, corporate facing banks, and we have invested in State Bank of India, which came out with a surprising, fantastic set of numbers. And we have shared our investment case with you in this month's monthly report that we've sent to you. There you will find all the reasons as to why we sold something or bought something, and we'll do this at a regular basis and communicate with you all our buying and selling decisions. So to sum it up, we may see a little bit of wobble in global markets, but for us it is going to be an opportunity, and we will take it with both our hands. You can already see that the process of realigning stocks and portfolio with the bigger trend is a continuous process, and that explains our current move. With that, I leave you for this month. Thank you very much.